turmoil as we've just been seeing to recoup that money to make sure that America's technology is protected?
Well, the market sell-off that we saw yesterday is just continued volatility that we'll continue to see in the coming months. I think there are many factors that affected this sell-off, and part of that as well is not only the quote-unquote trade war, but also the flattening of the bond yield curve, where the 10-year Treasury is paying a little bit over 100 basis points more than the 3-month. So the last time that the yield curve flattened out and inverted, we had a recession. So I believe that a lot of the smart money took note of this. We also have the trade war, which I believe Mr. Trump the president will come down and negotiate a great trade deal for America. Right. The market will probably continue to go up as long as we see the continued growth in earnings for companies here in America. And I believe we're going to see volatility in the near term, continued volatility in the near term.
All right. And so that's the point, right? You know, we're here in the middle of this whole trade discussion, right? Interrupting markets across the planet, across the globe. Josh, what will it take for investors to focus on something else like, say, U.S. GDP or earnings of the S&P 500? And what is the calculus right now that traders are making as they look at markets? Are they willing to make distinctions yet?
I think the biggest concern is the Fed. If the Fed hikes rates more than 3 to 4 times this year, which they were signaling this week, that could be 6 to 12 months, a precursor to a much larger recession.